Hello, everyone. Welcome back to the RationalInvestor.com's Daily Recap. Today is Thursday. It is the 4th of June. Thursdays around TRI is Baby Powder Report Day. And Julian came on and had a really nice conversation with the community. We did this video a little late today because sometimes when we just get talking, a couple girls chit-chatting on the phone, man, we just talk about everything. So had a really good conversation today, lots of levels, really good conversations about RSI studies and the craziness that 2020 is, even off of on the price charts Julian likes to follow closely. Also had a really good reminder. Put the media away. Put CNBC. Put that zero hedge guy away. Those kind of people, they're driven to sell subscriptions. They are driven to sell the clickbait, all that kind of stuff. You all know here, I don't have any marketing going on here. I couldn't care whether people watch this or not. I'm trying to make a positive difference in your life. But anything that's sort of ad revenue driven, that has some sort of subscription service attached to it, just, it's probably not in your best interest to, again, go down that lines. Sucks, but it's brutal reality. I do believe the public sure got played there over the past couple months, and it's really painful to watch. Anyway, looking at the market in particular and our fun little matrix that we like to chat with you guys about. Interesting. US dollar continues just to churn its way lower here. I was wondering whether we have some sort of monkey business on this candle. And then what is that? 1, 2, 3, 4 sessions ago, the euro just took off like a rocket. I don't know whether there's some sort of central banker plan there. But it sure feels like, and it might have been around that, all the civil unrest and the terrible political response to it. The general consensus that we had in the call today was capital is leaving the United States of America right now and heading off into weird directions, heading into the Thai baht, the Mexican peso, the euro. So hopefully we can get a little bit more calm in the market. I suppose, our conversation about risk on, risk off with the bond market crapping out here, maybe some of this failure has to do with, international money managers saying, you know what, U.S. market's looking a little too hot right now, a little dangerous. Tough to say. You can't write better fiction than reality. One of our conversations today, though, through the offering with Julian was, now what have I done? Was that we probably don't want to get too wrapped up in the media. And I had sort of put tweets out to the effect, look at the bond market, looks like it's just doing a natural correction. You're going to hear out of the talking heads that the sky is falling, interest rates are going through the roof, bond market's collapsing, blah, blah, blah. But I think it's actually just very business as usual, very normal. I might make the argument as we come into these AB equals CD objectives, we're probably going to see some fireworks. And again, it might be around, bond market's collapsing, that kind of talk. I don't feel comfortable about shorting or buying euros right now. Ugh, horrible. If I didn't like it 6 months ago, there's no way I'm going to like it now. And I don't think it's really such a good idea to get too wrapped up in the short story here. Probably the shorts were shorting against these highs. Maybe you played the narrow sideways channel. You better have your stop at scratch now. And I'd actually be looking to take profits into this event window here. Not get all rah-rah bearish. So ironically enough, whoever owns a media outlet, if they are short this, long euros, whatever, they would like to try and get out in size. They're going to just pick up the phone and say CNBC or CNN or whatever media outlet that's owned, your orders now are to ramp up this message, which will be the exact opposite. It'll get the public to do the exact wrong thing, and you're basically selling into their buy orders or buying into their sell orders, which is a tragic sort of commentary on capitalism itself. Anyway, point of the matter here, US dollar index itself still pointing down. This should be a risk on proxy, but it's interesting to see that the stock market seems to be running out of a bit of steam here. We've talked at length, of course, recently about things like head and shoulders objectives, AB equals CDs. We are in reload zones. We're up against previous highs, liquidity pools, and of course there's this crazy ass gap up top. So, the basic message of, unfortunately for the public, is, you're way too late to come in on the buy side on something like the US stock market. But we're probably a little bit, you're way too late to be a buyer. But you're probably still a little bit too early to be an outright seller. I mean, maybe this M will grab your attention. We should look at the charts and see things like divergences start to develop. So if we start seeing divs and we start seeing M's, well, now we're starting to talk about multiple reasons to consider taking a trade. I've talked recently about if I am going to short something in the stock market, I really like this semiconductors. So I'm just biding my time. You can see the potential divergence coming in here. It's not in yet. You can see if we look at something like a Williams percentage R indicator heavily modified, we are stupidly overbought. And you can see that the bullish volume impetus is actually falling off here. OBV hasn't rolled over yet though, so there's no real warning there. The way I'm sort of looking at this is I definitely have trade location now. So now I just want to see divergences confirm. We've got Willie nice and stupid, so the market's overbought. And my hunch is probably got to come back down, maybe trade down to value low again, typical sort of seasonal top. And of course we've got our crazy celestial events coming up here for July 1st, so that should be fun to watch for. So not really too aggressive on the short side here. In fact, actually we're still sort of popping off stocks here that are blow off toppies. And we're having a lot of fun talking about the little stocks. In fact, on your little matrix, I was kind of fortunate in that this little eyes. I don't know whether I told you guys about this. Great little pick from Kevin. This is a warrant, so it's not the actual stock, which is interesting because the stock's not really doing anything. This to me actually says somebody is accumulating this warrant, but I went and bought some at like 7.5. It went out yesterday at 18. So I was like this morning, I was like, look, I don't need to be a hero. Let's just get in a risk-free position. So unfortunately, I hit the bid here and actually brought the market down. But hey, a free position's a free position is a free position. I'm more than happy. I'm tickled pink. Actually, probably really interesting conversation here about sort of the age of the stock market. Kevin actually brought this up in our recent TRI-SOF meeting, and I thought this was an excellent observation. If we look at something like this Russell 2000 versus the Dow, and look at it from like a momentum perspective, you can actually see that, hey, there's something not right here. We don't have Willie quite stupid yet, so we're not like ridiculously overbought. When we get into these kind of scenarios, look out, right? Just like I showed you on that other name. But you can clearly see that this push higher here is not nearly as strong as this push higher here. So more sort of anecdotal evidence that, hey, we've really enjoyed a fantastic dead cat bounce. I mean, these markets have just, popped off doubles right, left, and center. But at the same time, too, Kavarkanator was showing me images like this. You have to understand that, yeah, I mean, the small cap market is doing really well here, but is this kind of move sustainable? Is that realistic? And, my just simple message is, for heaven's sakes, pay yourself. Right? If these things are jumping up, sell half on a double at least, or take 100% profits, but just pay yourself for your hard work, which is actually very hard for people to do. You'd be surprised. So, anyway, point that I would just make here, kind of like this is, if you did bang out a nice win, for heaven's sakes, pay yourself. As for actual structural failure yet here, don't quite have it yet, but you can see there's a little bit of an empire that came in there, I guess, a few days ago. So we are starting to get sort of, is this closer to the top end of the range? And we do have divergence, and now we're starting to get. You can see that if this goes and M's out here, right, rally up and then fail through the lows here, then probably we have to come back down, fill in these gaps to the downside. So, as I said there a moment ago, probably a little too late to come in too heavy on the buy side here in the market. Take your profits, pay yourself. You work hard at this, and this is a profit-taking window as far as I'm concerned. Heading on over to crypto, and really not a heck of a lot new to talk about on the other risk assets. Crude still sort of banging around up at the horizontal support and resistance lines. If this M's out, then, makes sense. We're done. And like I had sort of said there earlier on the stock market, it's actually starting to look very, I haven't topped yet. Don't have confirmed divergences, but we're getting up into some very toppy areas. And then also, too, I could make the argument that we're near the end of the move on the U.S. dollar. I mean, maybe the U.S. bond market can hold in against these lows. Like, I'm very bearish of the U.S. bond market right now. I think there could be some sort of big outlier shocker. Maybe that's what actually, you get your big outlier shocker. Bond market cranks lower. Crisis. It's the end of the world. That puts the bottom in the bond market, and it starts moving back up, and then the stocks top out. I could very easily see that scenario. With regard to the gold and the silver markets, we had, of course, Julian on the call. He's a big gold and silver trader, so he has lots of fun trading in there. I don't know whether I really want to be too in love with this market. We had, and I actually spent a good part of the day not only talking about the higher time frame position traders, but also talking to the day traders. I do like the idea that had you taken this silver bot just off the higher time frames, that, if we start painting lower highs and lower lows, then we're probably done here. Move stop to a trailing level there hit. Remember we said we're going to move our stop below these levels, and the market's moving higher. I kind of think whatever this ultimate low here is for those higher time frame players, that's probably appropriate. As you see on here, we also talked to the audience today about lower time frame players. And the higher time frame players, there's that move stop to a trailing level. Lower time frame players, I really wouldn't have a problem if you just said, look, I don't want to take any risk here. I'm just going to slide out. And then we go and we start forming bottoms again. And then we had the other day, we had a really big pop on a nice momentum breakout. So for, this is like an hourly chart. For those lower time frame players, I think we had some trade setups come in. Move stop to, where's my bot levels? Here we are. Move stop to scratch, level hit on that pump up. Then move stop to trailing level hit. And then notice we started to fail. So my conversation with the audience today was like aggressive traders, you probably got out on that M. Conservative traders, you probably got out on that M. And then the market promptly works its way lower, right back down into reload zones. In come the W's, and now we're going to work our way back up. So the way that I look at this right now is silver as sort of the leader of the two, gold and silver. I'd like to see this start to show signs of firmness. And I think it's pretty easy now. Remember, we said the higher time frame, these botters, where the hell is those levels? These botters move stop to trailing. I'm going to move my stop there, then I'm going to move my stop there, then I'm going to move my stop there. I think now they have their stop move there for those higher time frame, slow, conservative players. And that also makes sense too, because what that would really imply is losing this support line here. So for the time being, my message to the audience is trading range. And if we fail through this part of the range, then probably your best just to cool your jets. As it stands right now, my hunch is probably back up into this resistance area. But the area of this market that concerns me right now is I don't like the way the gold stocks are looking. And I put out messages to this effect, and so I'm kind of, full disclosure, I'm lightening up on some gold positions that I had. So I don't like the way that this momentum pattern looks like, especially with RSI going through the 50 line there. You guys have probably heard me talk about M's through 50 lines. That's not really a very good, healthy sign. So, I mean, look at that. That's just straight up. So, is it okay maybe just to pay yourself? Take some money off the table and just sort of let things settle down? So I did. It was a nice trade. It was a little ALO stock that I bought. So I can't complain. Profit is a profit is a profit. So I guess the message that I'm trying to give you guys here today is, I don't know. I mean, I got the bonds pointing down. I start off the conversation on the daily brief and every day, just sort of looking at what's the risk on, risk off picture. I've got the corn still pointing up. Got stocks still pointing up. Still got oil pointing up. Got the yen just completely collapsing here. Bonds, of course, we've talked lots about that. Narrow sideways channel broke to the downside. And, oh my God, is that an M? You know, so do I really need to be a hero here in the gold market? I mean, maybe the gold market can hold in here and everything's just tickety-boo and business as usual. But, you know, that's not a place I need to be a hero. So with that said, you know, like I said, I actually like the idea through this very uppy market to just maybe lighten up a little bit. Take some profits. Pay yourself, right? Whether it be on funny little warrants, now I got a free position here. I don't have any concern. Whether it be just, you know, just getting out of stuff, 100% profit, just try and pay yourself a little bit here. Heading on over to the corn. Now, the interesting thing about the corn, and really all of crypto in general, I like to show people, I believe that stocks are the ultimate leading indicator. And I like to keep an eye on the crypto stocks. It's got a nice little matrix of all the names. Still seeing a lot of uppy here. Look at fucking Marathon go. Jesus Christ. Nice popper. Way to go. Went and bought some of this SRAX. Look at that goddamn double bottom. Beautiful chart. I mean, I can't argue with that W. So I don't argue with W's. I just buy them. So I don't know what's happening here, but crypto looks pretty damn good here from the stock market perspective. DPW, I know that was a popular one recently. It looks like he's getting ready to take off. Look at this NCTY. Bang! Nice little double for you. Merry Christmas. So it's a pretty good looking market here. I'm not going to fight this market. Do I come in on the buy side here, though? I don't know. I mean, SARX, the way that looks, if I can see W's, this guy's down near, it's basically I bought the reload zone against this original market structure. If you can find names like that, okay, cool. You know, there's blockchain too. I just got off a double. It just went absolutely haywire. I mean, hell, you could come back in and join me here. The story's pretty good. But you know, please understand the context of the S&P 500, Russell 2000 kind of stuff. If anything, I like the idea that as these things are popping, of course, pay yourself, pay yourself, pay yourself. Ring the register. Okay, so, you know, crypto stocks sort of telling me, you know, things don't look so bad. Then I head on over to crypto, and of course, you know, everybody's obsessed with what's Bitcoin, what's Bitcoin? And, you know, ironically enough, where the hell's my damn bow tie? There she is. I don't see anything changing here. My hunch is this next couple weeks going to be some pretty wild action. So I don't really have anything to do on Bitcoin in particular. And my hunch is we're going to be banging around. Look, we got a nice up bar. You can see the inside bar reversal came in here, stopping the slide right on the goddamn bow tie. Drives it crazy. And generally speaking, you know, like thinking market symmetry, I would not expect to see some wild volatility in here, folks. Is it going to follow exactly along this path? It usually never does. But as a simple sort of roadmap of my expectations, this chart's making higher highs and higher lows. It's not a bear, which is good. I mean, that's a good thing. Remember, we had sort of talked about this higher time frame, longer term trends. This isn't a bad chart. If we can start Wing out here, 14,300 is totally doable. If Fed's got printing press running 24/7, Congress is diluting the shit out of the currency. They know it's happening right in front of their faces. Why can't Bitcoin go up here? This makes sense to me. Having said that, is this a new trade setup location for me? No. I got to let things calm down here for the corn. Where is the action? And I got to tell you, man, there's a hell, kind of like the crypto stocks, I see a lot of WE action on these altcoins. And of course, this is sort of the shit. And keep in mind, this is priced in Bitcoin. So obviously, they're going to gyrate around with Bitcoin price. But if we go over and look at some of the leaders here recently versus US dollar, I'm seeing a lot of W's. I'm seeing higher highs and higher lows. That's not a bear market. And I've made the argument repeatedly here that I don't think it's a good idea to short these altcoins. They are already at the bottom. And it feels like the path of least resistance right now is actually up, not down. So, do I have any new setups here firing right now? No, not really. But, look at good old Bcash. I always ask if Roger Ver's out of the penalty box. Nobody seems to have an answer for me. I know BSV, he's sort of the villain du jour in crypto. And I don't even know, maybe he's even gone away. Tough to say. But, if you're looking for new ideas, it sure looks like good old Bcash is trying to do something here. Look at this EOS. Nice 1 low, 2 low, 3 lows. You could probably draw bot levels off all that. They're coming in, and the ones that are already in, geez, look at this NEO. I mean, I don't see any signs of a bear here. This is painting higher highs and higher lows all over the place. And really, you shouldn't even lose any money if you took this setup. Probably have your stop below that big honking candle. For this daily brief video that I've been doing with you lately, been talking about the Ethereum bot, and I don't see any change here. Looks to me like it's just business as usual. So in this case, move stop to scratch, so you shouldn't lose any money on this trade. But again, higher high, higher low, inside bar, bullish reversal. It looks to me like it's heading higher. So I wouldn't step in front of that just yet. So there's your market. I mean, really interesting times we live in. You can see this US dollar index just coming screaming down into that level there. Never a dull moment in the markets, that's for sure. I don't know whether I really gave you guys any value here today. I sure hope so. I mean, I hope there was something in that rant that helped you. It's tough doing these videos day in, day out and trying to constantly spit out something new that you guys can chew on. So try my best. That's all I can do. If there's something out of this video that you've never heard before that you can add, maybe journal it. And 1 + 1 = 3. And for heaven's sakes, put all those... anything that has sort of like a advertising revenue base to their subscriptions, or it's a public television where they're doing commercials, put those people away, because they're not in your best interest. They're probably going to tell you the exact wrong thing. Trade your plan, trade your setups, and of course remember what your number one job is. All right, everybody. Hope you got some value out of that. Have yourselves a great rest of your day. All the best, and bye.